What do you make of the headlines that the president is worried that the Fed might raise interest rates 2 more times, which some people think is a foregone conclusion and others think is maybe not so certain an outcome?
I mean, all I can do is put this into the framework we talked about in the last hour, which was step 1 was the discussion with Joe Kernan, which was general criticism of the Fed. Step 2 was the tweet this morning that was specific urging them on policy. And now step 3 here is specific criticism about specific Fed plans.
Yeah.
So he's gone down this rabbit hole, which is the rabbit hole that every advisor to every president who I have known, by the way, going back to, I think, 1992, has advised the president not to do.
Let's be clear here. It was not the president per se who said this to Eamon Javers. It was a White House source saying that the president was worried about 2 additional hikes. Either way,
it would be another level.
I interpret it as. Go ahead, Jimmy.
But wait, man, we've sort of seen a version of this before. In the 1970s, Richard Nixon pressured the then Fed chief Arthur Burns to keep monetary policy easy going to the 1972 elections. Listen, he didn't give a big speech about it, though he did tell Burns that in person. What he had was his aides going out there talking about it. There were leaks to the media saying the president was unhappy, saying that maybe they should add new Fed members to the board of governors, that maybe the Fed should have less power and the president should have more influence. So there were lots of leaks, and they used the pressure that way to try to use that sort of leverage against the Fed,
and that
which
ended
ultimately
well, Jimmy,
worked.
Right?
Pardon?
That ended well, didn't it?
It ended with catastrophe, as you well know.
Right. And by the way, the dollar's sinking now even lower. If we bring up that intraday chart one more time upon Eamon's report, if I looked at it correctly, as we were just showing it now, to suggest that this is causing even more pressure, and it's being seen, Tyler. Perhaps, I mean, there it is.
It's a remarkable move in the dollar index. We've seen a more than 1% move from the time that Trump gave those comments that we aired yesterday in Power Lunch to right now. Steve, what do you think the Fed does? I mean, Gillian Tett of the Financial Times, who we interviewed the last hour, seemed to think that the Fed would go public, so to speak, that Jerome Powell will actually speak directly to the public in some sort of format to defend Fed independence. Is that the card to be played here?
Well, I think there are people who can speak for the Fed, who might speak for the Fed before the Fed itself speaks. And I think I'm thinking about people like I'm thinking like Fed Chairman Ben Bernanke, Janet Yellen. Where are they? I'm interested in that. Alan Greenspan is also a former Fed chairman who could speak up in that regard. You might expect them to speak at some point in time. I think Powell wants to stay out of this if he can. I think increasingly it's becoming difficult for them to do it. I think the reaction of the Federal Reserve is one where they keep going and stick to their knitting in terms of their intentions for this year. Right now, that December rate hike has now become a political litmus test for the Federal Reserve. And what's really interesting is President Trump may have made that second rate hike more likely now, because the Federal Reserve
that was your point.
might have to do this
just
in order to prove its independence.
And can we just highlight now crossing the wires, U.S. dollar index slipping to a 4-day low after CNBC reports that President Trump is worried the Fed will raise rates twice this year.
Well, he likes the weak dollar. Trump he likes the weak dollar.
He's getting what he wants, Jimmy, right?
A 4-day low, by the way, is basically a 1-year low for all intents and purposes here.
But, Jimmy, you bring up a good point. The more hue and cry there is and the more the dollar falls, maybe the more he does it.
Right.
Listen, I mean, the guy has no trouble with, everybody's upset about a policy.
Yeah.
Let me say it some more.
What's crazy, I have been telling Republicans for 2 years, including the current director of the National Economic Council, that they need to factor in the Fed when thinking about the reaction to the Trump tax cuts and the trade policy, that the Fed has a vote on economics. They better think long and hard who they put in as Fed chairman. And what they put it in is an institutionalist who's not going to listen to any of these novel theories about what Fed policy should be. We should be running high pressure monetary policy. Powell's an institutionalist, and that's what they're getting for good or ill.
Jimmy, were you surprised that in the 2 days of hearings with Powell, there was really no pushback, and I want to say from the Democratic side or the Republican side, about the stated intentions of the Federal Reserve to gradually raise interest rates? There was maybe a little bit on the edges, but given the previous concern by Republicans about the Fed being too low, that didn't exist. That wasn't out there at all. And maybe some potential complaints from Democrats about the effects of jobs or wages from the Fed raising rates. I was surprised that over those 2 days it was not an issue. I think that President Trump now is making Fed policy an issue, a political issue right now.
Yeah, listen, I was more surprised I didn't hear more for Democrats because it's sort of become a thing on the left that rates don't need to go anywhere, that we don't need to worry about deficits, that the Fed needs to stand pat, especially more among sort of left of center intellectuals. That seems to be sort of the growing consensus. So I was surprised to hear more about that. But I think you're right. Now we've all of a sudden a highly politicized Fed. Let
me jump into the political area, Jimmy, if I might, and get your thought and Steve's as well. It seems to me the president is the most unorthodox Republican maybe ever. Because he goes against the orthodoxy of the party on trade, number one. He goes against the orthodoxy of the party, apparently, on wanting a strong dollar. A strong dollar is in the interest of the United States, and that's generally shared by both parties, but the GOP particularly. And the GOP has been strongly against easy money policies under Yellen and Bernanke and so forth. And the president seems to have run counter on all three of those areas. Does it matter?
Protectionism, easy money. Welcome to the new supply side economics. I think, listen, if the president's going to take, the party in a new direction, then there needs to be some, thought about what that means and how all the pieces fit together, not just sort of a tweet and a few offhanded remarks in an interview. Unfortunately, I don't think the president has all thought about how the pieces fit together, how his trade policy, what he says about monetary policy, how it influences trade, the dollar, what his tax, how the Fed might react to lots of stimulus, latent expansion.
One quick final thought, Steve.
Well, Jimmy's in Washington, so he knows more about this than I do. But on the trade issue, and now on the issue of speaking about the Fed, there were supposed to be two guys in the White House that were supposed to keep the president straight on these issues, Mnuchin and Kudlow.
And Hassett, I would think Kevin
and Hassett, I should also name Kevin as well.
Before Kudlow.
I don't think these three guys are being all that effective. It strikes me that the loss that they had on trade, because of the connection of all this to currency and interest rates, now requires a loss on the Fed. And these guys are not winning this internal battle from what I can see.
How would things be different if they weren't there than what they are right now?
It's one of those questions, Jim. I don't know. But I'm just looking at the scorecard, and I don't see too many victories for the Kudlow, Mnuchin, Hassett camp relative to the Navarro, Lighthizer camp, I guess is the best way to put it.
I agree.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.